So you're trying to trade order blocks, but every time you seem to place a trade, price just tags you in and then ends up ripping straight through your stop loss and your order block along with it. And then you see traders like me who take trades like these ones, trading the same concepts of order blocks, but when I trade, I make over $6,000 in 40 minutes. In this video, I'm going to share with you the actual blueprint to trade order blocks successfully and show you exactly what you've been doing wrong so you don't need to keep making the same painful mistakes. In this video, I'm going to walk you through 3 secrets that I personally use on a daily basis to win the game of trading with order blocks. And then at the end of the video, I'll tie everything together, everything you've learned in this video into a trade breakdown, showing you how to choose the right order blocks and how to win trading with order blocks. The first secret that I'm going to be sharing with you today is the biggest mistake that I see. The second secret that I'm going to be sharing with you is something I call right place, wrong time. And finally, the third secret that I'm going to be sharing with you is a trap. It's how to avoid this one specific trap that gets all traders consistently. And just for some context, in the month of November, I made over $17,000 in 11 trading days. And if I didn't understand what I'm about to share with you here today, I genuinely can say I wouldn't have made that money. So let's go ahead and dive right in. The first secret lies in understanding that context is king. What do I mean by that? You see, context is essentially understanding the circumstances of price and not just the order block. The big mistake that lots of traders make is they try to find order blocks from aggressive bullish moves or aggressive bearish moves and trade them. What they lack is context. You have to understand why the specific order block that you're currently looking at would work. And most traders unfortunately don't do that. So if you look at this price scenario right here, you can see I have 3 different types of order blocks all mapped out. So the first order block is here, the second order block is here, and the third order block is here. Now I see so many traders try to trade this order block right here. And that's because they lack context. What you have to understand is, yes, we are bullish. We are in an uptrend, right? That goes without saying. But that doesn't mean you can just buy any bullish order block. You have to understand the context. You have to wait for price after we've had a break of structure and we've had an expansion higher. You need to wait for price to have a pullback like this. So many traders will get stopped out on these order blocks right here. I see it time and time again. The second failure mechanism here is this specific order block in here. Another thing that traders will do is they'll do the opposite of this one. They'll see that we're bullish and they'll just go and find a random order block from somewhere inside of that price leg, not realizing that by the time that price gets to that specific order block that they've chosen, the trend has already changed. Because if price comes down here like this, by the time that it reaches this order block right here, we've already shifted. We are now bearish. So we are no longer looking for longs, right? You shouldn't be trying to buy bullish order blocks when the market is bearish. That is kind of just rule 101. So understanding that context is king. Make sure that you choose the order blocks that align with what price is actually telling you. So what you want to see is something like this, where price comes down into these levels and then trades out like this. That right there would be an ideal order block, not this one and not this one. And here's another example of context is king, right? Once again, do you know how many traders I see that will try to take this bearish order block right here, right? This area in here as a bearish order block. What you have to understand is you have to have a bias. You have to understand, where am I expecting price to go to? Where are my swing points? So here we have a low down here, a high up here, a low down here, and then a high up here. So many traders will look at this small little 1 candle pullback like this and shift. And then when that gets broken, they're trying to short this order block right here, not realizing that the market is not on your side, right? Price will tag me in like this, come up in here, and you're trying to short this order block, and price does exactly that. So understanding that context is king, making sure that we're always trading pro trend, make sure we're not trading too far high up into the price range or low down into the price range if we are bearish. Always understand where price is going, and then choose your order blocks that fit inside of that understanding. So let's take a practical look context is king in action. You see, here we have a price chart. And now what a lot of people see is they avoid everything that's going on to the left of them and they fixate on what's happening right now. And when they look at price like this, it's very easy to get caught in the mindset of thinking like, okay, this is some kind of structural break and that leads to some kind of order block down here. And then, okay, that is essentially what I am going to be trading, right? And they're going to try and long position in here, the stops below, and then target, wherever it is they want to target. And that is essentially what they're looking at. But they're missing context. You have to understand the dynamic of the market right now. We are extremely bearish, right? If you just zoom out, you will see we were bullish for an extended period of time. And then we had this bearish sell-off. This bearish shift essentially realigned price to be bearish. And then we had a pullback like this, and then a continual shift to the downside. So you could even map this out as this is, your high, the high that's in control. And this is down here, a low that's going to be targeted. So there's two types of traders. So many traders aren't even aware of this. They'll be trying to buy this bullish order block after this small market structure shift, not realizing that there's a perfectly good bearish order block that sits in here, one that actually makes sense to trade because there is context behind it. So understanding, not every single order block works. Obviously, it's the order blocks that have the context that actually work. And so you'll be surprised. This is where their entry is. This is where someone like my entry is because I understand context, and price will run in, price will give a reaction. They're still waiting for their order blocks to be triggered, not realizing that they're sitting ducks. They're sitting on the complete wrong side of the market. It doesn't make any sense. And then what happens? They get tagged in and tagged straight out because they were resting liquidity. Secret number 2 is what I call right idea, just the wrong time. You see, here we have an example of number 1, price is bullish. So yes, you should be looking to buy. We have our swing points mapped out like this. We are definitely bullish. We have an order block in here, okay? And then price comes down like this, starts ranging around in here, and then has this aggressive move out of this zone. Now what happens is a lot of traders see this and they're like, okay, we are bullish, awesome. We've had a pullback and now we're going again. And then they have this aggressive move like this, and then that is their order block. And in some scenarios, that could be the right play, but it might be the right idea, just the wrong time. You see, what we have here in this blue box right here is the Asia session range. That exists from 8 p.m. to midnight EST. Any price inside of that range, something that if you've been on my channel, I use this all the time, the Asia session pocket of liquidity. If you're trying to trade order blocks that are on or inside of this Asia session range, there is proven data that says that this low right here is very likely to be taken out. So if you are this person and you are trying to trade this order block right here and you get something like this, the high likelihood is that price is going to come back into this pocket for the other order block. You want to be making sure that you're avoiding any order blocks that sit on time-based liquidity. It could be Asia low. It could be London low if New York has already opened. Any specific pocket of liquidity that is around time, so Asia, you want to avoid with a 10-foot pole because 9 times out of 10, you are going to get stopped out. So secret 2 in action. Here in blue, you can see that this is our Asia session, right? It starts at 8 p.m. and it ends at midnight. So we're coming up to the end. So London and Frankfurt are getting ready to open. The markets are getting ready to open. People are looking at opportunities. People that are trading order blocks see, price is bullish. We've just come into an area of liquidity. Okay, awesome, great. Now we're ready to long. They zoom in and they have a little look at kind of, fractal market structure. And they're like, okay, we had a high, we had a low, we had a high, we had a low, we had a high, we had a low. Oh, look, we just shifted bullish. And so they're looking at this, right? This context. And they're like, okay, that's a shift. We have an order block here. And then you have another order block in here. And the reality is that the idea of trading higher is probably a good idea because you are structurally bullish and you're respecting the low. The problem is it's the right idea. It's just the wrong time because we know, historically speaking, that this area is liquidity. So what I will do, if you know me, you've watched my trade breakdowns all the time, I'm preaching Asia liquidity, Asia liquidity. I get involved after Asia liquidity. So guess what? The first order block gets tapped in. The second order block gets tagged in. And now we are heading into market open. And guess what happens? Right at that market open, we breach all of that liquidity straight into the lows. And again, it may have been the right time. It was just the wrong idea. Wait for the market to close, wait for the liquidation to be taken out. Then you can look at some kind of internal structure shift if you are obviously bullish. And then you can use, your order blocks. And then you can trade. Take your trade when it actually makes sense, when you actually have context. So again, it's that example. It's the same idea, right? We're both looking at longs, trading order blocks, but you just lack context. A few things are just missing in your understanding. And then you think it doesn't work, or you doubt it, or you doubt other people. How many times have you taken a trade and then it just narrowly hit your stop loss and then ran to your take profit and you're left wondering, why did that happen? That is because you don't understand context. And so again, you can have something like this where price tags you in and then price runs up to these highs, right? It's all about understanding context. Structurally, you wait for the shift, then you wait for the actual shift, and then you're in, right? Same idea. We both came to the markets. You were looking for longs. I was looking for longs. You were trading order blocks. I was trading order blocks. I just had context of understanding of everything kind of capitalized in one. So you don't want to be leaving any of these specific secrets out. And finally, another secret, another order block position to completely avoid with a 10-foot pole is understanding the trap. When you see an order block, no matter how pretty it looks and nice it looks and it's pro trend and whatever, maybe you have some context, avoid the trap of placing trades when your order blocks are sitting on resting liquidity, unless liquidity has already been taken from the market. So here again, we have the perfect example, right? Swing low, swing high, swing low, swing high. Okay, we're bullish, we're looking for buys, price comes down, and we start ranging, and then we expand out, and every man and their dog sees this big green candle, and they're like, oh my God, okay, ready to go. And they overlook one small detail. Your price is sitting on this area of, support, or this area of equal lows, or whatever you want to refer to it as. It's sitting on liquidity. You, as a trader of order blocks, are not the only person who's looking at this position. There are so many other traders looking at this position. Not to mention, there is still an order block sitting right below the liquidity. And so what happens so many times, time and time again, you may get your reaction and then you get liquidated, only to see price go, leaving you wondering, why didn't my order block work? And the reality is, you're not applying context. You might have the right idea, just the wrong timing, and you get caught in these liquidity traps. Now, avoiding traps looks something like this. You're in the market, price is bullish, everything looks great. You have a swing low, you have a swing high, you have a swing low, you have a swing line. Everything looks good. You look like you're ready to long price, right? You break structure, you're looking at these different levels. Avoid anything that sits on Asia, right? That's already number one that you have to avoid. The second one is price comes down, you've had a reaction, and now you're aggressively trading out of this specific level. You've had some kind of, small internal shift that you're looking at. And now this is an order block that you want to trade. Great. It may be the right idea. In fact, it is the right idea. Everything is aligned for this specific thing to play out pretty well, but you're overlooking one small detail. And it's these small details that are costing you loss after loss after loss, wondering whether it even works, whether you can even be profitable. You have something like this and you're trying to target the highs and it all looks great, but you're overlooking the fact that we are sitting on perfect equal lows. You have to be cognizant of these traps, because guess what? Your stop loss is in the same area as so many other stop losses, especially when you start seeing bullish momentum, because that's when all the stops come into this specific area. And so again, you're left there, you feel good about your position, you get tagged in, and price runs straight through your stop loss. Now, as a bonus secret, this is hands down the most valuable thing as a part of my trading. It helps me get high risk to reward trades. It helps me avoid a bunch of losses. It's the secret of confirming your order blocks with multi-time frame analysis. What does that look like? Well, what you can see here is essentially, a representation of price. And in this black line right here, right? This right here is your 15-minute time frame. So you're bullish, great. You're bullish in here. You have a break of structure. you're looking at an order block, you want to trade from this specific order block in here, everything is rosy. What you want to do is you want to go down to a 1 minute time frame. And as price is approaching your order block down here, the 1 minute time frame is going to be bearish, right? And then eventually when it gets into your zone, if this is the right zone, what you're going to see is you're going to see an order flow shift. You're going to see the shift from lower prices like this on the 1 minute to higher prices like this. You're going to see a run of the low and then a shift and a massive abrupt run of the high. And when you get this, what you're essentially seeing is the market shifting in real time, the market respecting your order block, the order book flipping from sellers in control to buyers in control. That is your cue to act. You don't need to get stopped out immediately. Wait for a reaction on your level. Wait for the lower time frame shift. You don't need to react straight away. Wait for a lower time frame. Wait for that shift to occur. And when and only when you get that shift, then apply the same principles of order blocks, because they apply to every time frame, and then use the bullish order block that you've just generated on a 1 minute time frame or on a 5 minute time frame, and then use that as your actual trade, because that does two amazing things. The first thing that it's going to do for you is it's going to increase your win rate. You're going to have gone from what could have probably been a 1 to, maybe a 1 to 3 to what's more likely to be a 1 to 6, 1 to 7. Double, triple, quadruple your risk to reward with this one simple secret. It essentially eliminates all of the bad order blocks, because some of the order blocks are just going to get traded straight through with no reaction. And if you were waiting for reaction, you wouldn't have got involved in that order block. So make sure you do that in future. So now we're going to tie everything full circle and walk through a step-by-step breakdown of the type of trade that I would take if I was applying all of the principles I've just taught you here today. Starting with step number 1, which is context is king, which means I need to understand step 1, my bias for the day. So if I see that we've, shifted a low down here and I retrace my steps, I see we had a high, we come down low, we come up high, we go down low. Okay, cool. My context is we are bearish, therefore I'm only looking to sell. This right here, these highs, they are not structural highs. They are just internal range liquidity. So I expect that they will be taken out, right? Remember, context, we want to be avoiding this order block because it's sitting on liquidity. We want to go to the order block that is responsible for the shift in market structure. Then we want to identify and map out the order block. That is step 1. Applying step 2, avoiding the traps, avoiding the liquidity, not getting involved in here, right? Not trying to get involved where there is resting liquidity, and making sure that we have obviously our fair value gap. And then we're waiting for price to get into our level. Again, I'm not just looking at this level in here and going, okay, I'm going to sell on here and my stops like this, and then take, a 1 to 3.27 risk to reward. No, I want to be patient. I want to, number 1, know that if this is going to be right. So I want to wait for price to come into this level like this, and then I want to drop down to the 1 minute time frame. And what you'll notice is if you look, you'll see that the 1 minute is bullish. That is because the 15 minute is pulling back. So then what I want to do is I want to identify my structural levels. So if I'm looking at this level right now, essentially what I'm seeing is shift of highs, pull back, shift of highs, pull back, shift of highs, pull back, shift of highs. And now I want to see a shift of lows, but I want to see this low be taken out, but I want to see it close below the low. If it closes below the low, that does confirm to me that it is a shift. Well, that right there is very obviously a shift in price. So when you have a shift like that, you can have a look at what that looks like in price. You can go up to a 5 minute time frame. You can see a very obvious order block. There is no question in your mind that this is the right order block that you should be using because it's produced this level of reaction. You can map out your order block on your lower time frame, and then you can place your trade on the lower time frame, place your stops above the high, and you've gone from almost an 8 pip stop to a 4 pip stop, and you've gone from a 1 to 3.27 to almost 1 to 6, almost doubling your risk reward in this specific scenario. And that can be your trade. Now, sometimes, yes, it may not come back to this price level, and sometimes it will. But after running all the tests and understanding the final principle of lower time frame confirmation, I can tell you that it is so much more profitable by running the lower time frame confirmation model. And then it's just a case of waiting for price to tag you in and either run to your stop loss, which obviously sometimes happens, or it will be a case of waiting for price to run straight out and tag your take profit. And that is the trade idea complete.